This video will discuss the overall preparation of a full statement of cash flows using the indirect method. In order to prepare the statement of cash flows, we need to use an income statement for the company for the year. In addition to that, we need the current year's balance sheet as well as last year's balance sheet. So here we are seeing ABC Company's comparative balance sheets for last year, 2018, and the current year, 2019. Within the operating activities section, recall that we make a series of adjustments to net income to convert it back to a cash flow amount. We retrieve the amount of net income from the statement of cash flows and make the series of adjustments to convert it to a cash flow amount. Those adjustments are to add back any non-cash expenses. Here is depreciation expense that ABC reported for 2019 in the amount of $34,000. That would have been reported on the income statement, and that's where we would have found that reported and gathered that information. We also need to subtract any non-cash revenues and gains. ABC Company did not report any gains or losses within their income statement for the year, so there were no adjustments to net income for those items. We then analyze the changes in non-cash current assets and current liabilities. This information is obtained from the comparative balance sheets, reporting last year's ending balance, which became the current year's beginning balance, as well as the ending balance for the current year. They had accounts receivable, which is a non-cash current asset increase, and the indirect method indicates we need to subtract the amount of that increase. Current liability decreases need to be added to net income. Decreases in current liabilities need to be subtracted from net income. Net income plus and minus all of those adjustments gives us the amount of cash provided by operating activities. This was a positive number, indicating that overall operating activities provided more cash than it used. Once the operating activities section is complete, we then complete the investing activities section. Information for this section is obtained from analyzing long-term assets and investment account balance changes, along with additional information that is gathered from supporting financial documents outside of the general ledger. In the educational environment, the information needed to prepare the investing activities section would be provided. Here we're seeing with ABC Company, they sold land and cash of $25,000 was received. Because this is a cash inflow, the $25,000 is shown as a positive number. Equipment was purchased during the year in the amount of $70,000. Because the purchase of equipment involves a cash outflow, that is reported as a negative number. If we combine the cash inflows and the cash outflows within this section, overall we ended up with a negative number, indicating that overall investing activities used more cash than it provided. Now, with the investing activities section completed, we are able to prepare the final section, which is cash flows from financing activities. Information for this section of the statement of cash flows is obtained from analyzing equity and long-term liability changes, along with additional information that is gathered from supporting financial documents beyond the general ledger. Again, just like in the investing activities section, in the educational environment, cash flows related to financing activities would need to be provided. Here we are seeing ABC Company issued common stock, providing a cash inflow of $35,000. ABC redeemed bonds, or paid off bonds, resulting in a $50,000 cash outflow. Dividends were paid, resulting in a $40,000 cash outflow. The positive cash inflows and the negative cash outflows are combined to get the overall cash outflow during the year from activities related to financing. Once we have the three sections prepared, we combine the cash inflow from operating with the cash outflow from investing and cash outflow from financing. Those overall combined give us a positive $41,000, indicating that overall all of the company's activities increased the company's cash balance. We then combine the amount of that increase with the beginning cash balance, resulting in the ending cash balance for the year. If the increase or decrease we calculated when combined with the beginning balance in cash equals the ending balance in cash, it's pretty good assurance that we prepared the statement of cash flows correctly.